Video is all about you mortgage protection insurance agents that just jumped into this pool of fun, and then you're finding out that I may be in trouble here. So this is going to help you understand the trouble that's taking place in the mortgage protection space, but I'm going to give you the keys to success, how you can do a couple little things different to make a dynamic difference in your profitability, your sustainability, and I want you to see the trouble that mortgage protection insurance agents are experiencing right now. So thanks for joining with me. My name's Jason. I'm your friend in the business, and let's get after it. Here we go. So the reason that mortgage protection agents are in trouble is because the Wall Street Journal, if you haven't read the Wall Street Journal, I would advise you to maybe start reading it. It's a great paper. But what's going on is mortgage rates, have never been this high. 7.08%. This shot up. This skyrocketed. And what the Wall Street Journal article has spoken to today is that the mortgage space is not suffocated, it's paralyzed. This is a problem because where do your leads come from? They come from people placing mortgages and refinancing their mortgages as well. This information matters, and that's why I want to be very intentional to you to help you understand what is happening so you can see this clearly. The last thing you want to do is jump into mortgage protection and get clocked because no one spoke to you this way. So the Wall Street Journal did a real big study from good old Freddie Mac. All right, I like my mac and cheese. I like my Mac, on a lot of things, but this is bad news. This is bad news. If you're a mortgage protection agent and Freddie Mac says, whoa, 30-year mortgage rates are just really, really high, you're going to have trouble if you're in mortgage protection sales. Make no ifs, ands, or buts about it. So a 7.08%, interest rate is not just interesting, it's a severe problem. Interest rates have not been this high in 20 years. You got to realize that when you're selling mortgage protection, the very lead that's placed in your hands comes from a new mortgage being produced. There's a problem when the Wall Street Journal and Freddie Mac did a major survey and released it to the WSJ and says that this is the worst it's been in 20 years. Let's look back what happened just 7 weeks ago. What took place then? Interest rates just 7 little weeks ago was 6%. I know it may not seem like a big deal, but if you've got a mortgage, you know this is a big deal. It was just a hair below 6 7 weeks ago. Let's talk about a year ago. 1 year ago. Just a year ago, it was just a hair over 3%. This is a huge jump in interest rates rising on 30-year, loans. This is a problem. This is going to make your lead cost go through the roof, and then your ability to attain brand new leads is almost lost. This is ugly. This is why they're saying that mortgages are in major trouble for those that are refinancing, those that are realizing that the mortgage game is grinding to a halt. This is going to hurt you in this space. Dropped my little marker. All right, so let's talk about how we can fix this, because right now your pain points right now are going to look like this. Are we ready? Your lead hole is just that. It's a hole. You don't even have a bottom in here. It's bad. When they say it is paralyzed, mortgage protection agents, massive trouble. Your lead hole is just that. It's a hole. This is a problem. Your other problem that you're going to face is that if you're trying to get leads and no one is doing new mortgages, no one's refinancing, what you're going to realize is you just bought into an aged lead program. Any lead that you get is an aged lead. You've got to really be mindful of this. If it's grinding to a halt, call it what you want. If nobody's buying a new mortgage, what's being placed in your hand is an aged lead, or worse yet, you're buying a data list. This is the problem. Now, I'm going to give you the solution, but this is the problem. Mortgage protection agents are in trouble because the housing market, per the Wall Street Journal as of today, is paralyzed. Major, major problems. We've got to just put this problem in perspective so that we can be really powerful here. We've got to also think about CPA. And what does that mean? That means cost per acquisition. If your lead costs are skyrocketing, meaning it's going to cost you more to attain the client, to acquire your premium, to acquire your policy that you're going to help these great people with. Mortgage protection agents, mark my words, are doing the good work, but you're going to get hurt by being one right now. So my advice to you to fix this problem so that you don't get put into the aged lead program that's going to be painful, cost you a lot of dollars, is let's talk about a reposition so that you can be powerful, because this is what mortgage protection agents have done for years, but more importantly, recently, there's this huge run away from the mortgage protection industry and into the final expense industry. So let's talk about FE, if we will. I'm going to give you 4 reasons why this is the wise solution for you. And put it in the comments if this is making sense. I hope it is. I hope you like this content today, but we're going to talk about the 4 reasons why you're going to find that the final expense space may just save you and help you find massive levels of success. Let's talk about the first thing, and that's your lead problem that you have with mortgage protection. Let's talk about the lead solution right here. 11,000, people, great people, are turning 65 every single day, and will so for the next 10 years. This is big. Your leads are not going to run dry like the mortgage industry is experiencing. This is going to help you make, hopefully, a lot more money. So leads are not going to be a problem for you to acquire. So leads, those are the lifeblood of this industry. These people really need you. But you as an insurance agent, if you've got no leads, it's like, being a kid in a candy store and you got no money up in your pocket. It's not going to go good. You're not going to be in a real happy place, right? So the number one thing is leads, but 11,000 people are turning age 65 every single day and will do so for the next 10 years. This is massive for you because it's all about your market. Who can you market to? You've got to know your market if you want to make it. So the market for FE, huge advantage compared to the mortgage protection agents, which are great people, by the way, but there's problems for them, and I mean bad. I was talking to more of them today that are repositioning into FE, but let me share with you the leads are great in final expense. Let's talk about number 2. Let's talk about a very low CPA. The low cost per acquisition. A mortgage lead costs you a whole lot more because there's not a big pool of people that are buying houses, that are refinancing their homes and everything going on, which means your bandwidth of people that you can really be about marketing to is so minute in this space. Even before it was tough to get your hands on a lead, right now it's like, yikes. You might as well call it the old lead program. But the cost per acquisition for a final expense lead is insanely low, especially in telesales, because you can go statewide. You can go statewide. You can get leads at an amazing price, like 1/3 the cost of a face-to-face lead. You don't need direct mail in the telespace, not even a little bit. And if you are a face-to-face insurance agent, you can use Facebook leads, SEO leads, direct mail leads, and it's probably half of what you guys are paying for mortgage protection leads. Twice the leads will give you a better, hopefully, outcome here. But low cost per acquisition is big in telesales and even in the face-to-face play. Final expense. Clients abound everywhere. 11,000 people turning age 65 every day. The economy is getting hurt. Guess what? You're there to help them, and help them. You're not going to run out of people that get paid on the 1st and the 3rd of the month. It's everything that this business is about. So a much lower cost per acquisition is going to help you capitalize in hopefully powerful ways. Number 3, let's talk about amazing comp. When you're dealing with final expense insurance, it is amazing compensation. This is big for you when you're dealing with a very simple product. I'm not saying it's going to be easy, but this is a very, very simple product. So understand amazing compensation in the final expense space. Huge advantage for you. Tip number 4, let's talk about the fact that mortgage protection insurance takes forever to issue sometimes. You know what I'm talking about if you're in this industry. You write the piece of business, you leave the home, and then you get an email, oh crud, something happened. Wow, that hurts. Welcome to the final expense space. Lightning fast issue. So you no longer have this issue of knowing if you placed the policy or even got paid. This is powerful. So if you're feeling powerless, don't let it get you down. Do a slight reposition. You're already a life insurance agent. Just go from a place of pain to hopefully a place of profitability and gain. You can get what you want in this industry. Do not give up. I know you mortgage protection insurance agents are in trouble. If I can give you any free resources, reach out at jasonfinalexpense.com. I do run a national insurance agency partnering with some of the most powerful brand new agents as well as veteran agents across this nation. So if I can give you anything at all, reach out at jasonfinalexpense.com. I'll help you. I know you're hurting, but I hope this puts things into powerful perspective. The Wall Street Journal released some bad news. You can be a beast. Your opportunity is limitless. Performance-based business, 100%. But those that do, my goodness, those are those that get. I appreciate you watching. We'll see you soon. And any topics you'd like me to take up for you, please put them in the comments below. I'll help you. We'll see you soon, my friends. Have a great day.